My name's John Hilton, Senior Editor of Life Insurance and Annuities with Insurance and Newsnet. And today I'm joined by Neil Sprackling, Swiss Re's Head of Life Insurance and Health in the U.S. Division. We're going to talk a little bit about mortality. Welcome, Neil. We're glad to have you.
Sure, pleasure to be here, John.
Obviously, mortality is a big topic for life insurers. And with the COVID-19 pandemic, mortality data tables got a little bit wonky for a few years. And mortality remains stubbornly high. And Swiss Re does a great job with mortality surveys and data annually. Neil, why don't you give us an update on where we are with mortality right now?
Sure. So it's the lifeblood of our business, right? So we are, the largest rider of mortality risk on a global basis. So this matters to us. It should matter to everybody. The pandemic itself was an event that none of us had ever seen before, right? So you'd have to go back plus 100 years to see something that we could describe as a global pandemic, and that was the Spanish flu. And COVID played out very differently to the models that we'd built off the back of the Spanish flu. And what I mean by that is, if you look back 100 years, you would see that the flu pushed across almost the entire population, very indiscriminate of age and gender. Whereas COVID-19, it kind of like, it affected certain segments of the population more than others. And here we are now closing out in 2025, and we're still seeing this excess mortality. So what I mean by that is that, a level of mortality above where the mortality was pre-pandemic. And at the moment, that's ranging around about 2%. And that may not sound necessarily a very large number, but you extrapolate that out the size of, say, the US population, and talk about a lot of people, right? It's like 2% extra. Our view, and in fact this is supported by the Society of Actuaries as well, is that 2% will persist, certainly through to at least 2030. So we're not out of the woods, right? The worst of the pandemic is clearly behind us, but this residual excess mortality is still there. And we should all pay attention to it, whether you're in the life insurance industry like we are, or whether you're just general public.
And how has long COVID impacted mortality? How much do you credit that for the stubbornly high numbers?
Yeah, it's definitely a significant factor coming from that. I think if you went back to the epicenter of the pandemic in sort of 2021, there were lots of questions being asked about what do we think this is going to look like? What will the impacts of the people whose lives had not been lost, but they had been impacted by COVID? And we're seeing this playing out now, and we're certainly seeing it in the older ages. So let's take a cohort of people over the age of 70, right, who may have actually had COVID and survived it, but they've been compromised. So their fragility is a little higher. Their health may not be as good as it was. And that's where long COVID is starting to, the impacts of that. So survived COVID, but ultimately have got these residual effects, and we can see that. And very specifically, I'll tell you that over the age of 90, we're really seeing that playing out. Now, you might say, over the age of 90, what's your life expectancy? Not very much. Translate it into the life insurance world. If someone we think is going to live 6 months and continue to pay their premiums actually lives 2 months, and then you extrapolate that out, the size of the industry and the amount of business written in these segments, these are quite large numbers in terms of excess mortality. And so, we have to think about what this long COVID impact is going to be. And the second thing I'll just add to that is delayed effective treatments. So we're definitely seeing this in things like lung cancer. So there the excess is up to sort of 3% of what we would have expected it to be. And this is what many people said at the time of the pandemic, where people were not getting access to treatment, and so they weren't getting screened and diagnosed early. And we're seeing the impact of that now. It's that delayed effect. So it's kind of the long COVID, and it's the delayed screening and treatments that are I think are having a significant impact on that 2% I talked about.
Okay. Interesting stuff. So a lot of our readers are independent insurance agents.
Yeah.
So just for their benefit, how will these mortality numbers impact the life insurance they sell?
Yeah, so I think what you need to recognize is that whilst these excess levels are things that we should pay attention to, it's important that as an industry we keep sustainable pricing. Right. So, we don't believe that this excess is going to lead to sort of significant increases in the pricing of the business, but we need to make sure that we're paying attention to the trends and where we're seeing it in different demographic segments. Right. So I don't think there's any sort of concern around that. I think it's important that we take on long-term risks. You write a life insurance policy. Those are commitments. So whether you're the agent or the insurer or the reinsurer, we're taking on those risks for 10, 20, 30, 40 years, right? We want sustainable pricing. We want it to be consistent. And I think the industry has recognized that and I think been quite rational in its response to the pandemic in that context. So what I'm saying is we're not seeing irrational competition or pricing that does not match the trends that we are seeing. Our observation as a reinsurer is that the behavior that we're observing is encouraging.
Okay. In January, Paul Murray, the big guy at Swiss Re,
Yeah, my boss.
he mentioned that maybe by the end of 2025, maybe we turn the corner on mortality. And specifically, he mentioned the GLP-1 drugs.
Yep.
So we're closing in on the final quarter. I mean, how are we looking with that sort of prediction?
Well, Paul had it right. I mean, here we are now in mid-September, and the take up and the usage of just put the GLP-1s, the weight loss drugs, is actually really encouraging. And this is a good thing for the industry. It's a good thing for society. We've got a really worrying set of trends, not just in the United States, but in a lot of the developed countries. But here, you've got, somewhere in the range of 40+% of the people that are obese, and that trend has not been decreasing. Now, the GLP-1 drugs are helping that. We can see that in the decrease in the cause of death coming from diabetes. So one consequence of obesity is the increasing incidence of type 2 diabetes, right? So if you can address the obesity trend, then you will start to see an impact on type 2 diabetes. And type 2 diabetes is interesting because I call it the hidden pandemic. So, but it's different from COVID. Why? Because it's preventable and it's reversible. Right? So it's in our own hands to change that trend, right? There are some very worrying statistics of the number of people in this country that are either type 2 diabetic already or pre-type 2 diabetic. GLP-1s play an important role in countering that. So Paul was right to call this out at the early part of the year, but I'll put a caveat to this, right? So it's not a panacea, right? This doesn't solve the obesity issues around the world. It provides a solution as part of a wider set of change that we need to see. And that change I'm talking about is behavioral change. And that's probably the hardest thing for human society to embrace. I'm talking about changing lifestyle. I'm talking about diet. I'm talking about the choices that we make and how we live our lives. So GLP-1s can play a role, but they need to come alongside some of the other change. Right? So you may have heard us and me in particular talk about metabolic health or metabolic ill health, and that's what we're talking about. This is the increasing incidence of type 2 diabetes. Now, GLP-1s, by reducing weight, will have an impact there, and we're already seeing that, right? So I think that's good. But we're still in the stage of understanding side effects of that drug, and we're also looking at adherence to the drug. So once you're taking it, will you stick to taking it? And then, most importantly, if you come off it, what happens, right? Now, we are about to release a study that shows we've done some work looking at what we think the longer term impacts on mortality will be through GLP-1s. And there's some really positive, optimistic findings coming from this research. So in the most optimistic, over the next 20 years, we think we can improve mortality by 6.4% in the US population. That's a big number, right? Now, and that's just GLP-1s. So if you were then to add on some of this behavioral change I was talking about, that number could get even higher. And that's a really good thing. It's a really good thing for society. It's a really good thing for consumers, people selling our products, and us like Swiss Re who are taking on the risk ourselves.
Okay.
So pick this metabolic health topic, right, more generally. So, somewhere in the range of 90% of US adults have one indication of metabolic ill health. The 5 indicators are raised blood pressure, excess weight on the abdomen, raised cholesterol, raised blood pressure, and high triglycerides. Those are the 5 things, right? So one, in 90% of the population has at least one of those, right? Nearly half the population has 3 of them. Right? So we have a problem that's somewhat self-inflicted. This is my reversible, preventable thing. We can change all of this, right? We've been doing studies both in this country and in the UK through interventions that are helping people change, make different decisions on how they live their lives. And we're not talking about turning everybody into a gym junkie here, right? We're talking about after a meal, get out and take a walk around the block, right? Do something that's not sedentary, right? Something that actually gets the body active. This isn't rocket science, right? The other side of it is the ultimately the prevalence of high ultra processed food, so a fast food kind of society. And again, that's not unique to the United States, but we have a big problem here with it. So this is about getting people to make different decisions on what they're eating and how they're eating it and when they're eating it, right? And that's not easy because, and I'm talking, this is across large segments of the population. We often hear people talk about food deserts, places where you're not able to access the fresh food that I'm referring to, right? So we have to change all that, right? So the start with the awareness, raise the awareness of the problem, right? Then look at other different sort of solutions. And so the insurance industry can play a role in this. And this is the intervention I'm talking about. So we can go to a policyholder, someone that already has a product, right? And offer them incentives or help or guidance or tools that allow them to make some different changes in how they live their lives, right? And when that happens, we see really, really positive results. Right? So I'm very optimistic that we can make a change here, but I don't want to put rose-tinted glasses on. This is not going to happen in 1 year. This needs to be a concerted effort, almost at a kind of federal level, to see some change in how we sort of look at nutrition and how we look at the way that we live our lives, right? So it's an issue that goes way beyond the life insurance industry, but I think the life insurance industry is beautifully positioned and aligned with the consumer for the right outcome. Because what do we want? The consumer wants to live a longer, healthier, happier life, and boy, so do we. Right? Everyone wins. It's a bit of a no-brainer, right? So everything's on our side in that sense, but I don't want to sort of oversimplify how you get to that sort of status, right? It's going to take a long time, right? But I feel very strongly that we can't throw in the towel and just say, well, it's too difficult. You can't get people to change behavior. You can, and we've proven it. We've got studies that are showing that can happen.
Right. So to pick up on that thread, we're see here in the United States some insurers that kind of tie that incentive to good health to their premium payment.
Yep.
So it sounds like we might see that.
We are already seeing that, right? And we're seeing more and more insurers, companies that we work with, that are bringing in these health and well-being kind of like tools, platforms, right? It's a bit ironic that when whether you're insuring the risk or selling the risk, right? We take on these long-term commitments, and I'm generalizing here a little bit, but we don't have a lot of engagement with the customer for literally decades. This is a wonderful opportunity to improve that for the benefit of everybody, right? It's not intrusive, it's helpful, and it's changing ultimately, in theory, the health of the individual. I think it's a good thing. It's a good thing for everybody, right?
So Neil, I would be remiss if I didn't mention the controversy around mortality, and that's with vaccines. So where does Swiss Re stand on the vaccine impact on mortality, or is there one?
So look, we are a taker of mortality risk. So we spend our working days analyzing this and studying this. We have actuaries on staff that do that analytical work. We have doctors that look at the benefits of different medical advances. There's no question that vaccines have been a huge benefit to mortality improvement generally over the last 100 years. And you can look at it, whether it's flu vaccines, the COVID vaccines, measles, whatever you name it, right? So our view is that these are an important part of protecting everyday lives. They are a big part of what has led to mortality improvement. and we support the view that vaccines should be continued to be used in that context. I can't say it more clearly than that, really.
Okay, Neil, as we've seen in the conference this week, technology and artificial intelligence,
Yep.
it's been a big part of the conference and it's a big part of life insurance. I mean, what can predictive analytics tell us about mortality going forward?
Yeah, so look, I mean, let's put it on the topic of artificial intelligence, right? We talked about predictive analytics probably 3 or 4 years ago. Now we talk about AI, and this is a game changer, right? There's no question, right? It changes the way that we all live our lives at the moment. And in an industry like ours, which is very much focused on data, this has the potential to improve things in so many ways, whether it's improvement in mortality performance or whether it's improvement in terms of the customer experience. Uh, I think that from our point of view, we're investing in a number of areas to help in both of those categories, whether it's the underlying performance of the business or whether it's the experience that a customer goes through. Yeah, pick the underwriting process is a good example, right? So we have an underwriting manual, so a rating tool that insurers use to determine the classification of the risks that they're looking at. And we've embedded AI in that to allow an underwriter to fast track putting in the key details of an applicant and quickly getting to the answer. Something it would have taken them time to page through different screens of a manual. Now you put in, type 2 diabetes, a little bit of, excess weight, whatever you, and then it'll take you straight there, right? And it's like a sort of putting the underwriting manual on steroids, right? And just coming to the answer much more quickly. It's like you're sitting and typing into ChatGPT and getting something back really quickly. That's at the underwriting stage. We've embedded that as well into as many carriers now look to automate the process. So how can you then integrate data pulls into that automation so there's no human in the loop, as it were? Underwriting needs a human in the loop on complex cases, but on the straightforward cases, we ought to be able to embed the different sources of data into these automated tools, and that's another aspect of it. And then at the end of the whole process on the claims side, so we have a platform called Promise XP, which allows us to now much more efficiently automate the claims assessment and management process. Whereas before it's quite manual, submit in paper forms and what have you around from if you're the beneficiary of the person that's passed away. Now that whole process is getting automated and fast tracked in terms of making a decision. So this is all the benefit of what I describe as large language models and the adoption of AI. Well, I will say that we're still at the very early stages of that, though, in terms of investigation and research and looking at where the right places are to deploy it. But it's a super exciting development in generally, and certainly for the insurance industry. But I think an industry that depends on improving technology and quality of data, we're perfect to try and embrace it in that sense, right? But we've got to do it with caution, right? So there's a regulatory landscape we need to look at to make sure that we comply there, and we need to respect privacy of data for individuals. But taking those two things as kind of like table stakes, then I think this is honestly one of the most exciting developments in the industry that I've seen probably in my career. As I said at the beginning of the question you asked me, it's a game changer.
It is very exciting, and obviously there's uses across the life insurance industry. So where do you see AI in the life insurance industry over the next 5 years?
Yeah, I don't have a crystal ball, right? So I'm not sure I can answer that, with a great deal of confidence, because if you'd asked me 3 years ago, I'm not sure I would have been able to answer it at all, right? And, it's only, coming on 3 years ago when we started talking about ChatGPT. What I would say is that because of the increasing use of technology, because of the multitude of sources of data that we have, particularly in this country, in this market, right, in the insurance industry, it is ripe for AI to help us improve the whole process, right, in terms of speed and efficiency and just overall customer experience. So I think in 5 years, it'll look very different to what it does now. It is much improved already. I want to just add a sort of realistic component to this, though, which is you still need what is often termed as the human in the loop. There's the piece that the large language models and the whole AI advent can improve, but you still need a little bit of the art of selecting the right risk and looking for something that a model can't pick up. And so I think it's super important that within the industry, and this is certainly where we're looking at it, that there is a recognition of the importance of that skill in the process. So will this improve things immeasurably over the next 5 years? For sure. What exactly will it look like? I'm not entirely sure. But I think we'll see, and certainly if you're in the distribution of life insurance, you'll see huge progress in the next 5 years in how we're able to bring risks on board, assess those risks. But we need to make sure we keep that human in the loop.
Excellent. Thank you, Neil, for being with us. We appreciate you.
Yeah, it's great to be here, and John, and thanks for the questions.